Hello, everyone, and welcome to, that's right, the earnings reports to watch for the week of June 8th, 2020. We got some pretty key ones today. Obviously, earnings season's winding down to an extent. A lot of these companies aren't necessarily the ones that, everyone's always sought after, but there's always some good picks in here, absolutely. So this week I have a couple focuses right now that I think I'm going to be looking at, and that's going to be in Stitch Fix, Chewy, and AMC. I'll be highlighting those stocks specifically and then just give some opinions on some of these other companies out here. So we start Monday before open with Rev, Vehicles for Life. Not a company I'm too familiar with. Thor Industries. We go into after close. We go into a Super Mario enemy Koopa. Not really, but it's a pretty interesting company that I've looked into before. Not too familiar. I don't really have any good predictions as far as that's concerned. Stitch Fix, one that I certainly wanted to look into for many reasons. If you look just historically at the stock, I will, not to brag here, but it's a stock that I'm currently up 60% on these shares, and I only purchased 8 shares because I wasn't feeling, the most spendy. But I mean, in the last month, up 50% in 1 month, right? This is a stock that's really benefited from the really stay-at-home environment. It's in that category of stocks that benefits from everything going on right now, and I think investors have really shown that. They've been buying into it heavy, and it really hasn't been going in up quite as much lately, just due to the fact that investors are buying other things now, finally, right? We're expecting an EPS of, I believe, between 15 and 17 cents. Revenue estimates of $440 million. In my opinion, I do believe that this company is going to probably, in my personal opinion, I think they're going to be flat on their EPS line, and I could see it being a miss. I don't think they'll beat. I really don't think they'll beat on an EPS perspective. I really don't. Did I say negative 15 cents? Because it's supposed to be negative 15 cents. And obviously it's a worsening EPS just due to the fact that you're going to see a lot of increased demand, in my opinion. People weren't able to do any clothing shopping during this entire quarter for them. So people are going to be going online. And Stitch Fix is a service that is really neat in that aspect, where it allows people, especially when we think about the rise of influencers online, it's just incredible, right? The potential's here. And in a really a service like Stitch Fix that allows users to get new outfits every month is pretty exciting, or really whenever they choose to, but it's really exciting due to the fact that these influencers, obviously, they take pictures, whatever it might be, they wear different clothing every single time. They don't want to wear repeat clothing, okay? Stitch Fix, good for that. That's right. They'll automatically send you it. Stitch Fix, I think, is going to benefit pretty well. So that revenue line of $440 million, I'm expecting more, probably $450 million. They could miss it, but I think $450 million is a decent number for them. Really, the more important thing for them is going to be looking at that annualized recurring revenue number. I think that's going to be pretty massive, and we want to see how the trend of the company is going. As far as stock movement, I don't know if there is much room for movement, just due to the fact that it's been such an up and down, or really just, I should say, just an up stock lately. I don't know how they're going to necessarily turn this earnings report into a massive growth story. I think it's going to end up actually with the stock falling down somewhere around 5% after earnings. So that's my opinion on the matter, just because I don't know if there's really much more momentum that can lead this thing upward. Then we have Casey's General Store, one of the lesser thought about stocks in my opinion, because it's not necessarily the most widely known chain. One that I think will do perfectly fine. We talk about the hoard quarter is what I'd like to call it, the panic buy quarter. Casey's General Store certainly benefits quite a bit from that, even though they're not necessarily the chain people go to. When the big retailers are out of stuff, they go to the alternatives, and that might be a Casey's General Store. It might be. So, very interested to see. Obviously, EPS line should be pretty horrible on this, as you would expect. Just with all the increased expenses that go along with really brick and mortar retail right now. It'll be interesting to look at those. After then, we have Calavo, Frieza, Safe Bulkers, Ferroglobe, and BBV. So, Tuesday before open, Tiffany & Co. again. Again, not sure what that demand looks like for that. Not sure entirely. You have Lovesac, HD Suppliers, Signet, another jewelry company. Not too sure what to believe on that one. Fuel Cell Energy is one of the probably last year's biggest hype stocks for sure. It was shooting up for a good while there towards the end of last year. Was that early this year? I can't even remember if that was January or not. I don't remember. Regardless, I bought some put options on this thing and made a decent chunk of change because of the fact that it shot up so high and then went right back down. Not a company I'm too excited for as far as what they do, just due to the fact that the company's kind of garbage numbers-wise. So, not too interested, but I'll be peeping that earnings report for sure, seeing if it gets another short squeeze. We've got Quotient, Genesco, Brown, Foreman, Wanda, Sports, okay, and Cons. Tuesday after closed, one that I really, really am excited for is going to be Chewy. Now, Chewy is one that obviously I say really excited for just because of the fact that this is a hot stock. We're talking up in the past 3 months, up 84%. This is a pandemic rocker, okay? IPO a little bit less than a year ago. It's an online service, and this is what's fantastic. Online service for really getting supplies for pets. And what Chewy does great is that they just obviously you can set up a recurring subscription, whether that be every month you get this thing of dog food, every week you get this thing of dog food, this medication, whether it be tick medication, whatever you need. Chewy does it all. In an environment in which people don't want to go out, Chewy is really the go-to platform. It is. Chewy is the go-to platform for any sort of on-the-go service like this. Chewy just is. And I think they're going to benefit quite a bit. And that's why you saw the stock just skyrocket. And I think it's going to be in the same category as a Stitch Fix, where even though the revenue should beat, EPS on this one estimates, let me pull it up. EPS estimates right now for this quarter of a negative 16-cent number. Can't tell you if they'll beat on that. I think it's going to be worse than 16 cents negative, in my opinion. A little bit worse. But they might do in line. And an average estimate on the quarter of $1.5 billion of revenue, which is a 40% increase. I honestly could see them being a beat in that aspect. I could see more of a 1.6 to 1.7 number. And I could be wrong on that aspect, but this is a company that really is going to benefit because of everything going on. And I'd see that revenue just absolutely skyrocketing, right? And when people start using the service, it's just kind of a game changer for this company, right? Once you start using the service and you realize how convenient it is, especially if you own pets, Chewy is pretty convenient. Once you start using the service, you might not go back, you know what I mean? You might not go back to your traditional retailers and you'll stick with Chewy. And that's certainly a possibility. Again, the stock's just had too much of a run-up, though. I don't know how this could possibly continue that momentum. Even off of a beat on earnings, I don't know if they'd be able to continue the momentum, in my opinion. Following Chewy, you have GameStop. This is a non-essential retailer, so these are going to be horrific numbers posted here. Really horrific numbers. I don't necessarily know what to think those numbers are going to look like, but this is a dying company as is. And then you include in the fact that they're not essential and people aren't going to be going out there. Now, I'm not saying the clientele necessarily are the ones that focus on necessarily the social distancing aspect, because typically the people going into GameStop aren't, in my opinion, from experience, aren't necessarily going to be those that are quite high risk. So they'll probably go up to a GameStop regardless, right? Overall, still just a dying business. I would not suggest ever touching money or putting my money near GameStop right now, just because I don't think it's going to be around in 10 years. After them, Five Below. Really interesting company also. We just had one put in or built in our city not too long ago, maybe, less than a year ago. I've been in it once, and first time I've ever been in one. Pretty interesting store. Pretty much like I would call it a higher class dollar store, if that makes sense, even though it's kind of the same thing. But I still think it's a higher class dollar store, okay? Don't judge me. And we've seen really big benefits from those like Dollar Tree, Dollar General, I'd like to see if Five Below also keeps that momentum, and I think it's certainly possible. Another highlight one at AMC. I highlighted just because we talk about a nightmare situation. Movie theaters obviously completely shut down, right? This is going to be a horrific quarter for them. They're expecting revenue declines of 40%, and I anticipate it being a lot higher. I anticipate probably a 60% decline year over year in terms of revenue. EPS line is probably going to be around negative $2 a share. It's going to be very bad for this company, very bad. And the stock's already been hit very hard. So again, I say it could be very bad, but also I don't think the stock necessarily has that much room to move downward. Now it certainly can. I will say it's had a little bit of recovery. And by a little bit, I mean actually just a little bit of recovery. So in the past month, the stock is up 50%, right? It's fair. But still on the year, 1 year out, the stock's down 46%. It has recovered quite a bit, I will say that. But, again, still down 50% on the year. And I think it could go down further, absolutely. And I think it should go down further, personally, in my opinion. Because the long term of movie theaters, in my opinion, I don't necessarily know where that lies. We've had companies that are completely saying that they're no longer going to be doing their movies with AMC theaters, just because of some arguments. But think about that long term, what that could mean. If other companies realize that the direct streaming game is actually a lot better for them, they're going to go exclusively to just streaming. And with every company doing streaming, where does AMC really benefit? You know, they're going to be losing people. They're going to be losing movies, which means people aren't going to be going to their places. It's going to be rough for AMC in the future, I believe. Not a company I really want to be invested in for the next 5 years, in my opinion. Then we have Limoniera, Concrete Pumping Holdings. Okay. Varent, Lakeland Industries, and Sensionics. Wednesday before open, Unfi, Graham, Chico's, FAS, which, if you don't know, Chico's is it's a clothing company. Clothing retailer. Typically, you'll find them in malls. So, talk about garbage quarter for Chico's coming up. And again, a lot of these are already baked into the stock prices for sure, for the most part. This recovery they've had, though, could certainly get hit pretty hard, but I think investors are more focused on the future as opposed to current market conditions, which is weird. Guess, again, a lot of mall going on here, but really perfumes. Think perfumes, colognes. Think Guess. Garbage. Red Robin, we've seen all the other fast food chains not really see as much demand, surprisingly. Obviously, Red Robin being a dine-in, you see that they probably didn't do much service, and you probably wouldn't expect that they did nearly that much takeout. So probably expect a pretty, well, obviously it's going to be a very bad quarter. I don't necessarily know what to think about Red Robin, but it's going to be a bad quarter. That's all I can tell you. They were shut down. I mean, what else can I say? Cheetah Mobile could be a surprise winner. It's a stock that's been up pretty big, actually, all things considered, just due to the fact that mobile gaming has taken off so much. Cheetah Mobile, pretty well known for, they make games for Disney, I believe. Typically, the Avengers games they have right now are made by Cheetah Mobile. The ones on their phone are the ones specifically for app stores, right? So could be a big benefit as a lot of people are turning to mobile, and you saw that with Activision Blizzard's reporting when they saw King saw massive growth in users in Candy Crush as well as revenue from the King segment of mobile gaming. So mobile gaming taking off right now as people are bored. They don't know what to do. Neptune, after close, Sartorius, and Oxford. Before open Thursday, you have the Children's Place, another retailer that's non-essential, going to be hit hard. Hexo, 10 Ltd, Wiley, Astronova, and Giant FinTech, not entirely a company I'm too familiar with on that aspect. After close, though, you do have Adobe, which we think about the work from home and the home office, and I think Adobe should have a breakout quarter. I I think they have a lot of potential this quarter. It's not necessarily one that I would say is directly impacted for most people when it comes to work from home, but I think there are a lot of people that do get impacted by this, and you're going to see probably an increase in Adobe subscriptions. Whether it be Photoshop or really just any Adobe product, PDF viewers, whatever it might be, Adobe should see a pretty good benefit actually from this. And I'm really excited with those earnings because it's a company I certainly like as far as long-term perspectives are concerned. After them, you have Lululemon. What can I say? Mostly found in malls. Just not going to be seeing the demand. Online's not even going to be able to cut it for them. We have PVH. Sounds like a some sort of STD. Not excited about that. That's HPV, but close enough. Dave & Buster's. Talk about a no-go on this one. Dave & Buster's just absolutely going to be trashed. It is the epitome of large gatherings, so Dave & Buster's is just kind of pretty much a no-no right now, right? They're completely no-no, and even once they get the chance to reopen, still going to be a no-no. So Dave & Buster's, sorry, you're going to get hammered. RF Industries and Sea Change. Finally, before open, Friday we have the garbage Party City, which I don't know how they're still in existence. A company I plan and really expect to file for bankruptcy within the next 5 years for sure. Just because I don't know where that business model lies. I just don't necessarily know how it makes sense when they get a majority of their revenue found in the month of October. I don't know how a company like that, a retailer, can stay afloat. They're somehow doing it, and I'm impressed. But numbers are worsening for them. EPS is worsening. I think the company's going to file for bankruptcy coming in here in the next 5 years. Just be expecting that, and I could be wrong, but I don't expect good numbers from them. I know that. Then you have Bit Auto. So that's your earnings for the week, and I really hope you enjoyed.